It is a San Francisco office tower that was once the home of several businesses, but it just sold at an eye-popping discount. The new owner of the building bought it at 90% off the price it sold for in 2016. It's just one of the signs the city is still struggling with massive office vacancies downtown.
At the corner of Market and 6th Streets is the historic David Hughes building. Right now it's empty, with a large for lease sign posted over the first floor entrance. Just a few years ago, this was a bustling office space. But today, the sale price of this tower is a surprise for people who live and work nearby. It used to be valued at $62 million, and they just sold it for $6.5 million.
Dang, that's cool. That's all right.
When it was first built in 1908, it made headlines as one of the finest towers in San Francisco. Today, it's making headlines for different reasons. It sits just across the street from the Golden Gate Theater, but it's also on the edge of the Tenderloin neighborhood and smack dab in the middle of the Market and 6th Street corridor, an area the city has been battling to make safer.
Here at home, a foreclosure auction for San Francisco's biggest mall is set for tomorrow after several delays. San Francisco Center on Market Street's nearly empty. Its value has dropped again. Researchers at Morningstar found the center is now valued at $195 million, down 25% from where it was in August of 2024, $1 billion below its value in 2016.
An area that was bustling with people several years ago, but one that, according to the numbers, is now more vacant than it ever has been.
So right now in downtown San Francisco, we have a vacancy rate of a little over 35%, which is the highest that we've ever recorded in the history of San Francisco.
𝗪𝗡𝗪𝗧𝗛𝗏 is executive director of the Tech Insight Center at CBRE, which focuses on the tech industry and how it affects commercial real estate. He says that office vacancy numbers in San Francisco were 3 to 4% pre-pandemic, meaning we've seen at least a 30% increase, and that trend may continue. And while the Bay Area Council's Jeff Bellisario says homelessness, crime, public safety, and all-around cleanliness are still the top concerns among current and potential San Francisco employers, he also says one thing is true.
It's not a doom loop, right? The numbers don't necessarily suggest that. A doom loop would have high unemployment. It would have businesses running to other cities.
This one, not a shocker. The numbers are too high. $320 million. Well, that's the debt that was on it, right? Prior valuation. $320 million. Went to auction. Nobody made an offer. Too much. Things have come way, way down. In San Francisco, we're hearing a ton of talk about AI coming in. And yes, they are taking down significant amounts of commercial office space, but that alone doesn't prevent the city from experiencing what a lot of other cities are experiencing, but just to a much greater extent, the hollowing out of the downtown financial core, the hollowing out of the commercial areas to the point where nobody makes an offer on what was once an absolutely it was a prestigious property. It always has been, and it always will be moving forward. It's just that it's really discounted. Let's get into it. One of San Francisco's notable office towers was up for auction last week. A 20-story, 360,000 square foot Class A building on one of the most coveted corridors in the North Financial District. Class A. That means it is premium. It's tippy top. It's a great building. Nobody came to bid on it. Nobody showed up to the stretch of sidewalk in the shadow of City Hall, where the sale was held Thursday, was there to bid on the property. And the polished, quietly assertive building that was once valued at over $320 million. It's a bit of a reckoning. I have concern. It's a bit of a reckoning for the property at 600 California Street, which was tied to a distressed $240 million loan. Okay, $240 million loan, $320 million valuation, and pushed into receivership after its former anchor tenant, WeWork. Man, WeWork rocked a lot of boats, didn't it? Stopped paying rent 3 years ago, and subsequently just boom, WeWork just right in the toilet. With no contender stepping forward to offer bids, Dallas-based Lone Star Funds became the official owner of the property after the private equity group paid roughly $130 million to acquire the debt in January from Goldman Sachs, the original lender. So brutal. So brutal. But you know what? When nobody wants it, you can get it for a song. So this lender, it was very similar, and we saw a brief clip of it at the beginning of this podcast, to the poop in the elevator mall, Centerfield Mall in San Francisco, right? Very similar to that. Nobody was going to bid on it. It had so much debt. People were like, "Nah, I don't think so. We're not going to take this bad boy down. These numbers don't make any sense." And so the judge basically said to the lender, "All right, I'm giving you credit for what you've already got into this project as far as debt goes. You, my fine friend, are the new owner of the Westfield Center Mall in San Francisco. Good luck with that." They immediately sued all the rest of the remaining tenants. And so, the mall sold at auction, but didn't really sell. It was just basically a credit swap with the lender. Exactly like this, because it's too loaded up in debt. The quiet transaction felt closer to a casual curbside deal than a high-stakes transfer of a notable piece of the city's skyline. Some market participants pointed out that 600 California's anticlimactic sale underscores continued weakness in the office market, challenging claims of full recovery. And that's what I was kind of thinking. I'm like, we're hearing so much about San Francisco in specifically coming back because of AI. Well, these numbers here, these are not these are not recovery numbers. And just so you have an idea of what we're talking about, I'm going to zoom out for you here. So, financial district, here's the Ferry Building, Market Street, right? You are basically, you're right in the financial district. Now you've got the Tenderloin over here. Our failed mall was somewhere right in here. You've got Market Street. You've got areas over here, Mission, that are rough. Tenderloin, brutal. But in through here, this is the financial district. And that's what we're talking about. We're talking about buildings in the financial district that have taken an absolute huge haircut. So, yeah, full recovery in office space? No. Well, a bunch of space is being taken down in by tenants, but that doesn't necessarily transfer when you still got a fairly high vacancy factor in San Francisco to buildings being capitalized at what they once were, which was way more than what we're talking about now. Within minutes, Lone Star, which declined to comment, we have no comment for you, formally took ownership of 600 California through foreclosure, and in doing so, appeared to test the building's perceived value. Appraised at $109 million in 2024, a near 70% drop from the 2019, when the group placed a bid of $216 million on the property, essentially using the debt it had already purchased at a discount to bid on the building. So this is appraised at $109 million. Credit bid, $216. It's the credit bid we're talking about. That's the same mechanism used by the Westfield Center Mall, the poop elevator mall, right? They used a credit bid. Let's start with the biggest loan first, assuming none of you are here for that. ? The auctioneer said to the group of property hunters gathered around him. Wish we had footage of that. Had outside bidders showed up at the auction, they would have been required to furnish an immediate deposit and proof of funds, as you do. Hey, I'm not going to sell this to you on auction here on the steps without knowing that you can actually afford this skyscraper, without the opportunity to conduct physical due diligence. In the end, Lone Star took over the largely vacant tower for an estimated $361 per square foot. The auction effectively wrapped up the spectacular unraveling of 600 California, a decline tied in no small part to WeWork, the once high-flying flexible office space provider. And you know the story on that. Those guys, it just went, oof. WeWork's involvement with 600 California came as its private valuation peaked at $47 billion in the years leading up to the pandemic and was rather unusual. The company created WeCap, shorthand for WeWork Capital Advisors, an in-house investment arm set up to allow WeWork to move beyond leasing and operating space. Launched with a $1 billion equity infusion, WeCap was supposed to become a $2.9 billion investment vehicle, but quickly fell short of that big vision, which was overshadowed by WeWork's failed IPO in 2019. WeCap began purchasing buildings that WeWork would occupy as a tenant, including the California Street Tower, which it acquired for roughly $900 per square foot as 2019 drew to a close. As office demand dropped during the pandemic, WeWork owed landlords rent even as desks sat empty. The twist at the building we're talking about was that's where WeCap's anchor tenant. Oh, yeah, it was an arm of WeWork, right? WeCap and its partner for 600 California, Roan Group, were sued in 2023 because they defaulted on their payments, stating it accounted for 13% of traditional office space leased in San Francisco at the end of 2022. A year later, WeWork filed for Chapter 11 bankruptcy. WeWork stopped making rent payments. Basically just blew out their business, blew out this building. Now it's coming back around, and the numbers are still haunting it. Nobody wants it. 𝗥𝗘𝗔𝗦𝗢𝗡, commercial broker, said that WeWork's 2023 bankruptcy implosion continues to echo in San Francisco. Yeah, we're not really talking about that all that much, right? And yet, it's there because this building wouldn't be mostly empty. It might be fairly empty. This building, it's my understanding, is just about 100%. I mean, you might have a few tenants in there, but for the vast majority, there's nobody in there. Building's foreclosure sale dispels the perception that the local commercial property market has completely bounced back. That's what we keep hearing about. Oh, yeah, we're on our way. Oh, upside, huge. So you've got these dual narratives going on. You've got this idea that things are all, pointing to great progress in San Francisco because things hit such rock bottom in San Francisco that they elected a moderate mayor, Daniel Lurie, and he's been working hard to clean the streets up. It's my understanding things have gotten better, but that's a big city. It's going to take a long time to really kind of have an impact there. In the meantime, you've still got the work from home. You've got a whole industry that's being racked by just not enough companies out there that need commercial office space. And the thing with AI is that you've got a handful of people that are developers, but you're not going to be taking down massive amounts of office space because AI in and of itself inherently sheds jobs. Hey, we can do that. We can do that. We can automate that. We can automate that. No longer need all those jobs. So while AI itself comes in and takes some of this office space down, not a ton, but that's the big rah factor, right? But what it isn't showing you is that the purchase and sale of these buildings is not going all that great, to the point where something with a bunch of debt on it, just nobody bids on it because what's the market for it? How are you going to make that work? How are you going to make that pencil? What are you going to do with it? You going to turn it into residential? That's what, everybody keeps talking about. Oh, just make it into residential. Most of the time, those numbers don't pencil, just does not pencil. So you've got an office building that needs to remain an office building. You got to get it for enough of a discount where it makes absolute sense. And in this case, the numbers didn't make sense. So now they've taken it back from the WeCap that defaulted. And now they'll be able to go out to the open marketplace and put that on the market and see what it sells for. I mean, this stuff has been selling for pennies on the dollar, literally pennies on the dollar. The only other market I know that's been devastated more so than San Francisco as far as the sheer number of big office complexes selling is Portland. And some of Portland's numbers, you're like, wow, those are enormous discounts. whether or not they, values weren't quite there back when the numbers came about. But now things have dropped so significantly that this is the second or the third foreclosure sale that I've podcasted where there was no sale because the numbers didn't make sense. And judges basically, it goes through the foreclosure court system and you've got to have that sale. And this is how that goes. So now it'll probably get put back on the market unless they can work some kind of private deal and get somebody in there that, is just dying to take over commercial office building in San Francisco that just sold it in a foreclosure auction where it didn't really even transfer. It transferred, but not to a legit new owner. Still got to go through that. So it's got to be marketed. We'll see what that looks like. I mean, that is the rubber hitting the road that we haven't seen a ton of lately. We've just heard about, wow, things are going great. Things are going great. Things are going great. Zero bidders. Wild story. These are wild, wild stories. All right. That's it for me. Thanks so much for being here. Love to have you subscribe. Do all that good stuff. I'll see you in the next episode. Thanks again for joining. Bye for now.